The sum and substance is Chinese growth has not been cut from the previous IMF forecast, which remains at 6.8. But the repercussions of China on other emerging economies has led to a downgrade of emerging market growth, economies growth from 4.6 last year to 4% in the current year. And that has led to the reduction in global growth estimates as well. Aditi Nair, the economist at ICRA, is also with us, and we've been speaking with Dr. Soumitra Choudhury as well. Dr. Choudhury, the global growth forecast actually stood at 3.5 in April and then came to 3.3 in July and now 3.1 in October. Will that leave India alone? Is just a 20 basis point cut in Indian growth enough, or will India be impacted more if the global growth shrunk?
India will be impacted more if the global growth decelerates even more. But let's put it like this. 2015 is done. We are in October. Really, 2016 is what greatly matters. And the two things that, the main thing actually is the IMF, and the IMF managing director earlier has been stating, is talking about policy upgrades. Now, what are these policy upgrades? So the problem is that the advanced economies are both the US and the EU are in a state of extreme monetary easing. The US is considering renormalization. There's no more space monetarily. Yep. As far as the fiscal is concerned, the IMF is is hinting at fiscal expansion, provided conditions are there, probably conditions that do not exist except in China. Yep. So essentially, what is the policy upgrade? It seems to be talking about something which nobody is particularly clear about.
No, Dr. Choudhury, I'm just asking you whether even 7.3 is manageable for India under current circumstances.
As I said, you see, look, one of the effects that India will suffer from is the decline in the disposable income of commodity exporters in places like the West Asia, which is a very big export destination, as well as also remittances. It can have an effect if this thing continues further.
Okay. Aditi, what's your take on what the IMF has to say? Is 7.3 manageable, or do you think we remain vulnerable?
Lata, broadly, I would say that as far as the current year is concerned, 7.3% is now also a tad lower than what the RBI's, revised projections are, and definitely lower than what Government of India has pointed out. So clearly, there isn't going to be much of an uptick in growth this year. And in fact, as far as the IMF's projection for 2016 is concerned as well, the pickup that they've indicated is really mild, just 20 basis points up to 7.5%.
Yes.
However, given all of this, Indian growth, estimated for next year as well, remains well above what the projection for global growth is as per the IMF. And to really sustain Indian growth at these levels going forward, well above the world, economic growth levels, the pickup is really going to have to come from domestically led sources. And I don't think that the global situation is in any way conducive for a major pickup in Make in India at this point in time. Yeah, so we're going to have to dig deep.
Yeah, that's the point. That's the point I wanted to come back to Dr. Choudhury about. If India is to genuinely outperform, then as you say, this year is largely done, calendar year. But, the IMF itself speaks about the need to reform taxes, expand the tax base. They point out that inflation and external deficit are fairly stable at this point in time, but the fiscal leg is still fragile. And they genuinely point out to the need to expand the tax base and continue to trim subsidies. Do you think India can, break out of this slow global growth and even produce 7.5 and more in subsequent years? The IMF doesn't seem to think so. Even up to 2020, they project Indian growth at only 7.7%.
I think India can. Question is that, leave aside what the IMF says or doesn't say. India can, but, we have to work out a method of expanding domestic demand. Aditi is absolutely right. The external demand is not going to be a driver, was not a driver earlier. It's only a kind of a dressing. It was a dessert. Okay. A main source of growth is domestic demand. Domestic demand has to be improved. Now, if you again look at what various things have been hinted at. One is monetary accommodation. The fact of the matter is, not only are prices down, the prices will remain down for quite some time. It's not going to revert. If that does not happen, clearly there's space, at least in India, for monetary accommodation. Fiscal accommodation, I'm not willing very sure. You can have some amount of expenditure reprioritizing and focus on expenditure areas which actually give you more growth.
Okay. Well, actually, we are out of time, but the IMF seems to think that next year our inflation will actually be marginally higher than the current year. They see it rising to 5.5% from 2015's 5.4%. So I don't know how much of monetary accommodation they see. And of course, there is the big problem of bad debt, which is preventing the transmission of cuts. That's also a point which the IMF discusses. But out of time, sir. Dr. Chaudhary, Aditi, thank you very much for joining us. Well, that's it on this special coverage of the IMF's economic outlook for 2015. Thanks for watching, but keep it with CNBC TV 18 US markets coming up for you in a minute.